Hello, weekend. We'll start in the United States of America with something that I admit do not totally understand, but I'll give it to you anyway. Unemployment rate, ages 18 to 24. So far, so good. And if we go down to middle left, we can see it's veterans and non-veterans. And in October 2010, non-veteran unemployment for 18 to 24-year-olds was 16.9%, and for veterans slightly more at 18.4%. But we move on 1 year to October 2011, and non-veteran unemployment for 18 to 24-year-olds has gone down to 15.3%, but unemployment for 18 to 24-year-old veterans has gone up to 30.4%. Quite a difference. And if that was covering a large amount of people, I'd say it was very worrisome. But I wonder how many veterans there are in the 18 to 24 age group. There's some slight oddness there that I don't get. Still, I give it to you anyway, and you can follow the link and work it out for yourself. So let's go out into the world. Exxon signs Kurd exploration contracts. ExxonMobil has become the first of the super major oil companies to venture into Kurdistan. Now, I've put this up because I didn't know Kurdistan existed. In a controversial move that will be seen as a huge vote of confidence in the semi-autonomous region of Iraq, could spark a backlash in Baghdad. So we find that Kurdistan doesn't actually exist. Exxon, the largest international oil company, signed contracts with the Kurdistan regional government last month to explore for oil and gas in 6 blocks in the region, according to an advisor to the KRG. Because we've had this before and found that most all of the oil contracts awarded from Baghdad have been awarded to non-American outfits. I don't think we can think that the troubles in that area are over. Because for one of the reasons we have Syria very close by. Syria stops payments to Shell and Total. Total is the French outfit. Syria has stopped paying for oil produced within the country by Royal Dutch Shell and Total, highlighting the economic tensions affecting Bashar al-Assad's regime after months of pro-democracy protests. They're basically running out of money. They're still hard, but they're running out of money. And I don't know how that will affect them, because it's not as though they fall over and the opposition will take over. It's far more complicated than that in Syria, so let's not go into it this weekend. No, let's move on to India, where we read India's economic gloom deepened on Wednesday as worsening loan quality at the country's biggest lenders rattled investors. Moody's downgraded its outlook for banks, and October car sales skidded 24%, their worst drop in over a decade. The central bank has raised interest rates 13 times since 2010, but has failed to rein in inflation, which remains above 9%. Instead, asset quality at banks is eroding, and growth in Asia's third largest economy is slowing. So if they were on the list to save the world, little pencil scratched through them. Beyond BRICS, Slovenia bond yields hit 7%. From the Financial Times, no need to really go into that. From all the news this week, we quite understand a heading like that. And so Slovenia is a full euro-using currency member of the Eurozone. Just another one. This sums up, I can't say my feelings on it, but it certainly sums up major feelings on the overall crisis in Europe. Writing on the wall. Silvio Berlusconi isn't the problem. Italy's spending isn't the problem. It's not unions or benefits. The Eurozone isn't the problem. Neither are Greece, José Manuel Barroso, Nicolas Sarkozy or Angela Merkel. The problem is the banks. That's the end of it. It's not the end of the article, obviously. They go on to write more, or at least David Widener does, and it's worth reading, but that gets the gist of it. The problem is the banks. So a bit more details. 3 excellent paragraphs by Cantus, German, writing in English for us to understand. This is about people like me saying that if they want to save their euro currency, they will have to release the ECB from its restraints and let it do some printing. Okay, this is Cantus's critique of that. I do not think so. The constraint that governments cannot fund budgets by printing money was not created by the euro. Monetary financing of budget deficits was outlawed and frowned upon all across Europe decades before that, before the introduction of the euro. The pre-euro Bank of Italy, for example, would have been every bit as reluctant to expand credit to its treasury as the ECB is now, if not more. And yet Italy did not face a sovereign debt crisis comparable to what it is experiencing now. Sounds right? Sounds right. The key constraint introduced by the euro is a different one. Competitiveness can no longer be restored through exchange rate depreciation. Thus, a relatively pain-free option is now lacking to grow out of excessive debts and or inflate them away. Non-euro countries, like the UK, have made ample use of this option during the crisis. Countries like Italy can't any longer. And the remaining alternative, internal devaluation through wage and benefit cuts, is tough. Very tough. And again, we've got to say, that sounds right. The UK has depreciated the pound by 25-30%. It's dubious whether it's helped or not, but they've done it. The problem with the Krugman-type view, and that is that money should be printed up by the central bank, is that the underlying diagnosis is incomplete, and that's fair enough, incomplete, which can lead to inadequate policy prescriptions. Of course, liquidity support is a key part of resolving any financial crisis. But this is not where the euro area went wrong, and thus liquidity support by itself won't suffice. The euro area went wrong when unsustainable, non-tradable sector booms in the periphery countries pushed up wages without raising productivity, giving rise to huge differentials in competitiveness between euro area economies. This is what Martin Wolf keeps going on about, that this is at the base of it, that money has flooded into places like Spain, for instance. They have used this money and given themselves more wages and made themselves comparative to Germany, now totally uncompetitive with Germany. And just giving them more money doesn't really cure the cause of the problem. Right. This that I got yesterday afternoon has bothered me more than anything else. Now, it bothers me. I'm not putting it in because I think it should bother you, but it just bothers me. Let's give it a go. Poll. 78% of Germans see euro surviving. Associated Press. Nearly 4 in 5 Germans believe the euro will survive. That's statement 1. There are really only 2 statements here. 4 in 5. So let's say 80%. 80% of Germans believe the euro will survive. And more than half think Chancellor Angela Merkel is doing a good job of handling Europe's debt crisis, according to a poll. So it's over half and 80%. But let's say most Germans. Most Germans think the euro will survive. Most Germans think Angela Merkel is doing a good job. I'll tell you why this bothers me. Angela Merkel to have done a good job, which I can't deny, from a simple point of view, and that's what you're going to get from the German people, the thing that she has done is not let the European Central Bank run away by printing money. She's kept a grip on that. In that way, I'm sure, in the minds of the German people, that's why she has done a good job. But the German people also mostly think that the euro is going to survive. But the euro is not going to survive unless Angela Merkel does let the ECB do the printing. And I can't see how these two views can reconcile each other. What I think we have is denial by the German people. They want the euro to survive. They want very much that the German people are seen to have been doing the right thing, and doing the right thing with these nagging things behind them. They've got the war guilt. That does nag Germans. They have the Weimar Republic inflation. That does nag Germans. And they want to do the right thing. They want to be efficient and follow the law. So, on the Weimar Republic thing of no inflation, they can follow the law and say it is the right thing to do not to print up money. And that's what Angela Merkel said, and I'm sure that's why she gets their vote of confidence for doing the right thing. But they have absolutely, obviously not understood that that's the only way to keep the euro together. I don't understand how they can keep these two views in their mind at the same time without some sort of mental blockage of denial. That they don't want to face the possibility that they will have to make the choice between letting the ECB print money or not letting the ECB print money. And I think there's a mental block there that they think that they can be doing the right thing and being efficient and all that, and holding that line and thinking somehow that the euro will hold together. Because there's no, in the German press, there's no information being put to them saying we can hold the line here, not printing up euro, and the euro will be all right because of this, this and this, because those this and this do not exist. So the Germans do not have that information. They are going purely on, as long as we hold the line and do not let the ECB print, the Eurozone will be, the euro currency will be all right. But these two do not meet. There's an inseparable barrier. And that inseparable barrier must be denial in the heads of the German people, who obviously can understand this, and I think probably do understand this. So this barrier is pure denial, that they know they have got a decision coming whether to break up the euro or not, and that decision is coming to Germany sooner than they possibly want it to come. Finish in the UK with this again. I was bothered by this as well. I don't know what bothered me most, the desperation of it, or the stupidity of it, or the fact that it made me feel old and sensible when I was just got through these first 3 opening paragraphs and dropped my head onto my hand above the keyboard and went, oh, God. I'll read them. The number of property sales in the UK has crashed since the recession, despite 5 million people languishing on waiting lists, the CBI claimed today in its Unfreezing the Housing Market study. John Cridland, CBI Director General, said the fall in sales had accounted for a third of the 6% drop in UK GDP during the recession. Boosting housing sales could be a major game changer for growth, he added. Allowing young people access to their pension pot for mortgage deposits, which would help their chances of getting a mortgage, would drive this boost. And if you go on, I needed to actually do a few more paragraphs before total understanding or non-comprehension of this set in. But you get it from that third paragraph. Allowing young people access to their pension pot for mortgage deposits would help them get a mortgage. And it's just, for me, it's a head shaker. A, do they think young people have got pension pots and, money stacked away? And what would that pension pot be stacked away for? The hint in it is in the word pension pot. It's meant to be for a pension, not for putting deposits on housing. This is just such a horrible, self-serving. It's just, I think the word is desperate. It's just horrible. And it just drives it home to me, if they have to be this desperate and horrible, the situation must be desperate and horrible. And I believe it is. Have a good weekend. Bye.